Hello, everyone. Welcome to our Chapter 8 lecture. The topic for today's lecture is on master budgeting. In Chapter 8, we're going to focus on what's known as a master budget and the components that make up a master budget. We'll understand why do organizations have budgets and take a look at the budgeting process. So what's a budget? A budget is a detailed quantitative plan for acquiring and using financial and other resources. So to simplify things, a budget is going to show the expected cash inflows, the expected cash outflows for a business over a specified time period. We're trying to predict what will take place in the upcoming future. So most budgets cover what we call a fiscal year, which refers to any 12 consecutive months that have been chosen as the accounting period for a business organization. For some companies, you would call a perpetual budget, which we call a 12-month rolling budget. So let's say they may show the budget for the first quarter of 2021, and once that quarter is over, then they're going to show the budget for the next 4 quarters and include the first quarter of 2022. So we'll talk all about these different types of budgets. So again, for most companies, their operating budget will cover their fiscal year. So the budget may be from the beginning of 2020 until the end of 2020. Typically, the budget is divided into what we call 4 quarters. So as you understand, there are 4 quarters in a year, first, second, third, and fourth quarter. So we do have a budget for the entire year. However, we want to look at what do we expect to take place during each quarter of that fiscal year. When you have a continuous budget, again, this is a budget that's going to roll forward 1 month or 1 quarter as that current quarter is being completed. So again, if we have a rolling budget, once the first quarter of 2020 is being completed, we're going to add to that budget the first quarter of 2021. Therefore, the budget will always remain a 12-month time period going forward. Now, there are two key reasons why we prepare budgets. First, of course, is planning. So let's make this personal. What if you wanted to acquire a new home or a new vehicle, or perhaps you're planning for retirement, or even thinking about your children's future education? You want to plan. You want to think about what would be the cost of the expenditures that's going to take place. So when budgeting allows us to plan what we foresee will take place in the future. We also have control when we have budgets. Budgets allow us to see what objectives are going to take place in order to reach our goals. Are there going to be any, what we call bottlenecks, anything that may hinder us from reaching our goals? Then we can see that early on during the budgeting process. And we'll discuss these terms in greater detail later. Okay? So why do organizations create budgets? So once again, when you create a budget, it has a lot of benefits. I won't go through each of these, but we can show the goals and objectives of the business. Think about the plan for the future. Allocating resources, the amount of resources required in order to reach these goals. Uncover potential bottlenecks. So we're preparing a budget. So make it personal. Think about your own personal budget. Think about showing all of your expenditures for the next month, whether it's for your mortgage, your rent, utilities, food, entertainment, etc. And then you're going to show all of your cash inflow for the same time period. So now we're saying, do we have sufficient cash inflows to cover our cash outflows? Are there any potential bottlenecks, any potential problems that could actually hinder us from reaching our goals? We can know about these bottlenecks early on by preparing a budget and create a plan in order to address these particular issues. Okay? Also, when you have a budget, it can help to improve efficiency as well as effectiveness. So now think about your working experience. Typically, each department has a budget. There's a budget for supplies, there's a budget for training, there's a budget, for all those type of different things. And we understand that, okay, if our training budget is $10,000, we want to make sure that we stay within those restrictions. So we can actually reward our employees if they're able to stick within those budget guidelines. So with budgets, it helps to improve the efficiency of the company as well as operating more effective as an operation because, again, we understand that we have these restrictions and we have to adhere to these budget guidelines. So let me say this up front. A budget is only good if that budget is being followed. I'll say it again. A budget only works if the budget is actually being followed. Okay? So there are different ways that companies can create budgets. That's what we call the top-down budgeting and a self-imposed budget. Top-down budgeting and a self-imposed budget. I won't spend too much time on the top-down, but I do want to introduce this topic, top-down budgeting. So with the top-down budgeting, this is a budget where the top management is going to set the budget. So with the top-down approach, management will set the budget that's to be followed by the employees. We don't like that approach of the top-down budgeting. We prepare a self-imposed budget or what's called a participative budget. This allows participants to participate in the creation of the actual budget. It doesn't mean that you get to create the entire budget on your own, but you will have some input into the budget because think about it, who knows what's needed for your department better than the people who work in that department, right? Yeah. So we're going to focus on a self-imposed budget, which is what we call a participative budget. This allows those to actually get involved in the budgeting process. Okay? So typically, not every employee will have input into the budget, right? So typically you're going to have your top management, middle management, and you have your supervisors. We're saying that with a self-imposed budget, these different tiers are going to work together in order to create a budget for your department or for your division. Now, top management will have the final say-so about these budgets, but typically the different tiers of management will have some input into the budgeting process. So there are some advantages of having a self-imposed budget. First, it shows respect for the opinions of those lower level managers. So now the supervisors feel that they have some impact into the budgeting process, and they may also consult with the actual employees within their division or department to get their input as well. With this approach, the budget estimates normally are going to be more accurate than estimates made by top managers who, don't tell them I said this, who really have no idea what's going on within your particular department. It is also a motivation because now you help create the budget, right? You said that we can do our job within these restrictions. So now you must take ownership. You can't complain about the budget because you have to set the budget, right? Right. Now, with a self imposed budget, again, it will be reviewed by higher levels of management to prevent budgetary slack. What is that? You know what budgetary slack is. So we know that we only need supplies on average that cost about 10,000, but we're going to ask for 20,000 just in case. So top management will review the actual budget to make sure that those numbers that are coming in haven't been increased, if you will, just because of what's known as budgetary slack. But I'm sure you all going to do that, right? Right. In chapter 8, we focus on what is known as a master budget. A master budget is a combination of smaller budgets put all together. The thing I want you to focus on and be aware of that when you have a master budget, it is predicated upon these smaller budgets and they all work together. We begin with our sales budget. We will focus on how many units do we expect to sell for the budget period. So if it is a fiscal year, we're saying how many units do we expect to sell within this year. Maybe we expect to sell a total of 100,000 units. All right, which says that I'm going to need a production budget to make those units. I'll look at my ending inventory budget, see what we already have available for production. I need material, right? Labor, overhead costs. Then I need to sell the product. So we look at our sale and admin budget. I'm going to look at my overall cash budget. That will show all of the cash inflows, all of the cash outflows to see if we will have a surplus or a deficiency at any time throughout the budgeting process. Prepare a budgeted income statement to see our projected profits. Prepare a budgeted balance sheet to look at all of our assets as well as our liabilities. Okay? This will conclude our overview about budgets. With our next video lecture, we're going to start preparing the master budget, beginning with the sales budget.